Hello and welcome. You're watching Market Edge, and let's get you the update of the day in terms of how the market has moved. It's been absolutely flat a move coming in on both Nifty as well as Sensex, because for the Nifty, you've seen a very mild cut of about 5 points on the spot basis after the kind of up move we saw on open, and 24,140, 150 was the level that we were trying to hold on to, but that Sensex expiry pressure seems to have played out in the last 30 odd minutes of trade, and you have seen a sharp decline coming in. 24,072 is where we've shut shop. So we've been in that 50-60 point range all throughout the day. Pretty range bound for the Sensex too. Absolutely flat is where we've closed over there. Small cap index also the same, flattish moves over there, but the mid cap index was slightly under pressure, 0.4% lower, and it was a bunch of earnings candidates that saw some adverse reactions on the downside, and that is why the Nifty mid cap index was under pressure. The India VIX has cooled off a further 3%, but the Nifty banking index also joining the Nifty mid-cap index, 0.3% lower on some of the banking names as well. In terms of some sectoral gainers and losers, it was some names from the media space that did well, but you had IT, that was the outperformer. At a point of the day, it was higher by 1.5%, fizzled out from there. Nonetheless, a 0.7% gain coming in on IT, and it was the larger caps that did well in IT, followed by auto, FMCG, oil and gas, and pharma. On the flip side, what was under pressure was Nifty Realty, Signature Global, weak set of numbers. Prestige, the update came out, but the stock was under pressure by about 2.5%. Nifty Finance, Defense, PSU banks, metals and banks, these were the sectors in the red, with Nifty Energy being absolutely flat. Of course, some of the biggest movers of the day, you had an ICICI Lombard, the biggest casualty, 10.5% cut on the back of weak earnings. Then you've had ABB on the back of strong global parents earnings. That stock has done very well. Some of the refiners like MRPL, Chennai Petroleum have done very well in trade. And then some of the other stocks from the broader end of the market that saw some action on the positive side. A name like, let's pull up that chart, the name like Signature Global, Novoco, ITC Hotels on the red, they've closed under pressure. But the tilt when it comes to the advanced decline ratio, from the 500 stocks, you've got about 217 in the green, and on the flip side, 282 in the red. So the tilt was slightly towards the declines, and that is what the market breadth has looked like in trade today. But Harsh, do we have more details on the Wipro numbers?
Yes, we do. In fact, you've got some decent momentum on deal wins, even though the numbers are looking exceedingly soft from what even we were penciling in. Large deal bookings at $1.6 billion. It grew around 13% sequential, so some bit of pickup there. 13 large deals were won in Q1. Guidance largely in around the $2,600 million or $2.6 billion guidance. That was what was penciled in. What we're seeing in terms of revenue, revenue is down around 1% thereabouts. IT services revenue also down in around the same region. EBIT is really where the miss has come in at, and the flow through is from the top line. So around a 300 crore miss on the top line, leading to a 300 crore miss on EBIT and profitability as a result. So broadly, that's where the miss comes from. We've slipped below the 16% where the margins is concerned. So that's how it's shaping up, at least for Wipro's numbers.
Okay, so that's the take coming in on Wipro, but let's shift focus to the market once again, give you a deeper dive on how the F&O space has shaped up in trade, and let's take it across to Sajid for that. Sajid.
Thank you, Snehi. Nifty finally, managing to hold on to the 24,000 level. Coming off from days high, it closed at 2472 level, and look at the open interest, which has fallen nearly 4%. So there was intraday covering of the shorts, but towards the end, because of the Sensex expiry, we saw that volatility coming into the Nifty, which is the Nifty Bank again ended lower, 0.3% there, and open interest is up nearly by 2%, and we saw some shorts getting built ahead of the busy weekend where we have the top banks coming out with their earnings. Look at the constituents of Nifty Bank. You have SDFC Bank, Kotak, Axis, and Bank of India, where we are seeing some kind of short build-up happening, long build-up happening in ICICI Bank and SBI, but IndusInd is seeing some short covering there. So the Nifty Bank down nearly 175 points in today's trade. In the call and put writing, we saw aggressive call writing towards the end, and we also saw some unwinding of the calls happening for July 21, which is next Tuesday's series. at the 24,000 level there. So if you look at the distribution chart, 24,000 is holding on firm at this point in time, but you have a good resistance which is now building up at 24,100 as we go into the Friday, where you have Friday and the weekend, where we have a lot of results going to come in there. But the gainers of for today, the futures gainers, you have ABB up 6% on the back of the global update that came in for India and Indian subcontinent. IEX is up nearly 5.5%. Dixon is up 5% today's trade, and Dixon is seeing a long build up today. Actually, in futures losers, you have stocks like ICICI Lombard, stock down on the back of weak earnings, 11% down. AMC has been down today 5%. Nippon Life is down around 3.82%, which is there. So the AMC stocks down in today's trade on a day when SBI's SBI Mutual Fund's IPO is closing at and it subscribed nearly 25 times. But Torrent Pharma stock build up coming in. Lombard is seeing the 38% jump in open interest, and RBL Bank also saw nearly 27% jump in open interest for. And that was something to look out for. But open interest losers include stocks like Amber, where we saw short covering. Kalyan was seeing some short covering, and TCS was seeing some short covering in today's trade. So we end the day on the hope that 24,000 is sustained at this point in time. Some shorts getting covered in the process, but there is some support which is coming at 24,000, and but some resistance which is coming at higher strikes going into Friday.
All right. Thank you so much for that, Sajid. Let me also quickly pull up the guidance, the sequential guidance, constant currency, which Snehi has just pulled out. Snehi, you want to probably mark that out in terms of the Wipro guidance?
Sequential guidance for second quarter in terms of dollar terms is between 2,597 to 2,651. But if I take a look at what this translates into in terms of percentage and constant currency, the sequential guidance is between negative 1.5% to positive 0.5%. Now, the expectation that we were building in was negative 1% to positive 1%. So slightly lower than the expectation that we were building in all, it's in line with the kind of numbers, the softness that we've seen in the numbers. This guidance also looks slightly softer compared to our estimates. So yes, that's the take coming in on Wipro's numbers. We've also got numbers coming in from Tech Mahindra, wherein the revenue from operations has come in at 15,712 crore rupees. Compared to the number in the previous quarter, 15,076 crore rupees. So it's been a nominal uptick coming in. In fact, it's absolutely flat when you take a look at these numbers. We'll be getting you more details in terms of more numbers over here. But if I take a look at the profit after tax, it's coming at 1,486 crores compared to 1,356, a slight uptick coming in over here as well. This is the first print.
Because the expectation suggested that the PAT will come in around the 1,582 crore mark. So you've got a miss coming in, at least on the profit side of things for Tech Mahindra. The top line you said, Snehi?
It was at 15,712 crore rupees.
So top line largely in line,
more or less,
or
yes.
maybe marginally ahead of what the street was penciling in. So that's how really Tech Mahindra is shaping up. We'll also quickly pull out the dollar revenue and see whether that top line growth is driven more by dollar revenue or by currency gains. And we'll try and get a sense of that. But the EBIT number is expected in at 2,190 crore.
It's coming at 2,264 crore rupees.
Perfect.
It's an uptick of 8.6% on a year-on-year basis for the EBIT number. The EBIT margin has come in at 14.4 compared to 13.8, more or less in line with our estimates.
No, in fact, slightly better. 14.1 was what was penciled in our estimates. It's coming at 14.4. So slightly better in terms of the EBIT margin. The dollar revenue, anything at all on that count, Sneha?
Yes, we've just got the press release. I'm going to wait for that to open.
No, sure.
So
let's quickly try and pull that one out and decode those numbers. And yes, but at the moment, it's looking like a slightly positive set, at least on the top line in EBIT. On profitability, a slight bit of miss.
The dollar revenue has come in at $1,660 million.
1,660 million. So that's again ahead. That's again ahead of estimates. At least 3% ahead of estimates, which is crucially a positive because.
And the large deal wins number at 4,063 million, an uptick of 37.5% on a year-on-year basis. So that's the number we have over there. The free cash flow is up by 94% on a year-on-year basis. But yes, the deal win number at 4,063 million, that's about $4 billion in terms of the deal win number. Just taking a look at the kind of deal win that we were penciling in, I'll try and pull that number up soon. But yes, this number more or less.
The new deal wins was expected to be around $1 billion.
$1 billion. So this number looks incrementally stronger, I would say.
Yep, broadly that's the take on Tech Mahindra. The numbers are looking much better. EBIT margin at 14.3, 14.4 is much better. The journey towards 15% versus the 14.1% number that was expected. So, likely we should see those kinds of reactions tomorrow. But of course, plenty awaited, especially the commentary. So keep note of that. Let me bring on board Akshay Bhagwat of JM Financial Services. Akshay, before I ask you on the index, let me quickly ask you with regard to some of these IT names, Wipro, Tech Mahindra, HCL Tech, TCS. At least 4 earnings are out now, out of the way. Also Infosys. Any of these looking good on charts? If not, which is the best one?
Yeah, good afternoon to all. Well, see, ITS has had a good round of a pullback from the bottom in the last few trading sessions. And I believe this is more of just a temporary recovery rally in most of the IT space because the charts for majority of the stocks still are on the negative side. So if I were to pick and choose one IT name which is good, then I would select or I would stay with Coforge as one of the best charts on the IT space. So it's buy and hold. It's not a short-term momentum call, but I'm looking forward for potential targets till 1650. As regards the other IT names, it is better to book out profits at the current rates if you are up for short-term trading action.
Akshay, your view on Tech Mahindra on the charts, the first print suggests that it's a rather strong set of numbers. At least the deal win is a beat. You've got the constant currency growth. That is a very healthy beat. How are you looking at Tech Mahindra on the charts?
So Tech Mahindra, if you look at the past couple of months of price action, it's more of a neutral setup and there is a strong resistance area at 1560 to 1570 zone. So probably if it does open gap up tomorrow, there is slight uptick. I think 1560 is the area where you should consider booking out profits from a short-term perspective.
Okay, that's on IT. Akshay, give us your sense on the overall market. It's been a tight range-bound couple of days for our market. When do we break out of this zone and what are going to be some levels on the upside to watch out for?
See, for the Nifty index, it's more of a range-bound setup as I look at the last 5 to 6 days of trading action. But the important levels one need to follow is the level of 24,300 basis spot Nifty. So if you're looking for any positive momentum to build up or any buy signals to trigger, 24,300 has to be overcome. But that's almost 150 points away from where we closed. And as the current setup goes, it's about whether markets manage to defend the immediate support of 24,000 or not. Data points, the option chain on the FNO numbers, they are still signaling a caution at the current rate with the probability of 24,000 to be breached in the short-term scenario. And if it does break, then we are staring at downside targets till 23,800, which is a massive support base for the market.
How do you position yourself, Akshay? Sectors, stocks, pockets?
So as I said, the market Nifty is in a choppy ground. Recently, It's the IT space which has given a buffer for the Nifty index. Banking also is doing well. So if you're keen on, finding for those safe haven bets in the current market scenarios, it has to be the pharma names where there is good buying momentum, which we have noted in terms of the flows and the positive price action on the charts. So a couple of stocks, if I were to name in the pharma space, would be a stock like a Sun Pharma, a Divi's Lab, a Lupin, where strong technical setup still continues. So I believe if you're looking for safe haven bets in this choppy phase of the market, it has to be the pharma space.
Okay. And Akshay, what is your view on some sectors that have seen a lot of swings like metals or real estate? In the last couple of days, we've seen some momentum on some of these sectors. Can you give us a sense on how you're reading into these names? Any names within the sector that look good?
See, metals and real estate names both have recently had a choppy market price action, especially the metals pack has been continuously noting weakness and any slight pullback scenarios too have seen profit booking. So if I were to name one stock which still is strong on the technical charts on the metal front, it has to be National Aluminium. Although last couple of days there has been slight profit booking at levels of 370. I think if the stock does dip around 350, it's a good buying re-entry opportunity again. 330 is a strong support for the stock, and my belief is, looking at the technical charts, that 380 should be happening soon in Nalco. So it's a very few names to buy, but if one I have to pick up, it has to be Nalco from the metals pack.
Okay, picks quickly, Akshay.
Yeah, so a couple of picks on the technical front for short-term trading. So as I mentioned, Divi's Lab is one of the names with a target of 7490 and 7450 roughly. This is the target area you can look forward to. Stop loss will be 7027. Second is Info Edge, where there is a bullish flag and pole pattern in the making, looking for potential upsides of 1350 to 1400 with stop loss below 1167.
Okay. On that note, Akshay, thank you so much for your time. It's time to step into a very short break. Viewers, on the other side, we're going to be decoding a sector that has been in focus today, ABB and BHEL. These two stocks have been up and away, and we'll be looking at and decoding the cap goods space. So stay on with us, and we'll be right back on the other side with a very nice conversation on that. With Market Edge, and we've got a very interesting conversation lined up for you. We take a look at some of the buzzing sectors every day, and today we've decided to put the spotlight on the capital goods space, because of course we've got numbers from ABB's global parent, on the back of which ABB India has done well. 81% growth in the India order book, looking rather robust. And you've also got a good set of numbers coming in from BHEL. That stock saw an initial downtick, and then we've seen a very sharp spike coming in to close the day with a gain of about 4.25%. While these were some of the stock specific moves from the sector today, let's try and decode where this sector overall is headed. And to do that, we've got Mr. Arafat Sharif Syed, the Director of Research at Capital Goods and Defense at Daulat Capital, joining us on the show. Arafat, hi, good to be speaking with you, and give us your sense. First of all, give us your reading on the numbers that you've seen both from ABB's global parent as well as BHEL. Break them down one after the other for us, and give us your sense on how you've looked at these numbers.
Yeah, hi. To just start with ABB first. So if you look at the ABB reported strong set of numbers for globally, although India number is due for the next week on 31st of July, the stock up 10% was largely driven by the 81% growth we have seen in the inflow. So that was largely driven by the single factor, which is the data center build out, specifically for India, and also they flagged this exceptional data center growth for the quarter. Again, if you look at the Indian utilities in the middle of large transmission distribution upcycle, which drive the growth for the India center. So I don't very convinced with the ABB story as of now. The reason being is, if you look at the margin, which is still struggling, let's say around 14-15%, what we have seen level of almost 20%, let's say CY24, that's the gone case now. And especially the quality of order has also QCO, which is a quality order also there, which the company need to import various part, which is also impacting the margin. So right now, I'm not very bullish on ABB. But on the BHEL side, if you look at a very strong set of numbers, the company reported 40% revenue growth, which beat the RNX consensus by huge margin. Again, they reported losses last year, which come to profit at 500 crore rupees at 6.5% EBITDA margin. And also the profit came in at almost 380 crore rupees, which is compared to loss of 460 crore rupees last year, same quarter. So again, if you look at the BHEL, I must say the company is upcycle tremendously, led by the strong growth in the B2G side. So if you look at the India currently at almost 480 gigawatt of the capacity, power capacity. Out of that, let's say almost 50% from the thermal. And what we believe is thermal is a upcycle at least for the next couple of years, wherein almost 80-90 gigawatt of pipeline is there, which is a BHEL is a clear-cut winner of that with almost 50-60% market share. And also, if you look at the margin profile for BHEL, from losses last few quarters now improved significantly. Last year, they reported almost 6.9% margin, and for this quarter, margin came at 6.5%. For the full year, we are building almost double-digit margin at around 10.5%, and similarly around 11-12% for the next few years. So that can drive the growth significantly for BHEL.
Okay. I'll stick with, hi, this is Harsha, by the way, Arafat. I'll stick with, the ABB first. With regard to execution, do you believe that execution could accelerate materially, just given that the order pipeline is now just getting larger?
Yeah, for ABB, I don't think the, let's say, revenue growth would be except 20% in the near term. If you look at book to bill now, again, order inflow, which is now almost 3,500 rupees for the last couple of quarters, moving to 4,500 rupees. And also, let's say, gradually it will move to around 10% to now 15 to 20%. But the stock is very expensive, trading at almost, let's say, 65 times FY20 earnings. So let's say no room to, let's say, move significantly. And also we discuss margin is remain concern for the company. Let's around 14-15% compared to 20% what it did in CY25. And also margin of 14-15%, it's way above compared to its, let's say, last 10 years EBITDA margin average.
Okay, that's your take on ABB. Arafat, on the flip side, you are very positive on BHEL, at least compared to ABB India. You have a positive view over there. How are you looking at the quality of the order book for BHEL? Is the conversion from orders to revenue, is that rate as per your expectations?
Yeah, so BHEL has an order book of almost 2.5 lakh crore rupees. Earlier, they have loss-making order, which is largely getting over. Now, the whatever execution they have, it's up. The margin is above average. So now I must say the margin loss-making and legacy order is behind the BHEL, and also we can see margin profile significant improvement from here onwards.
Okay, thank you so much, Arafat. Great connecting. Good having a perspective of how you're looking at some of the numbers coming our way. All right, Meryl here, which are the cues you want to keep on your watch for the day of trade of Friday?
Coming to you with some of the important developments which could be seen shaping markets on the 17th of July. In India, it's the day that the Forex reserves data is released, while globally from the US, we'll be watching out for industrial production data, import price index, and from Eurozone, the CPI will be in focus. In terms of global earnings, watch out for the Travelers Company and Truist Financial Corp, both expected to release their quarterly results. Back home as well, it's a big day for earnings. We've got from the Nifty pack, Reliance Industries and JSW Steel, both expected to announce their first quarter results. And apart from Nifty as well, we've got a lot of names in focus. There's Global Spirits, Poonawalla FinCorp, Tata Tech, Havells India, and many other names which are expected to remain in focus on the back of their first quarter announcements. Also watch out for SmartWorks Co-working and Bharat Coking Coal, where a portion of their equity capital is going to come out of a lock-in period, so we could see some selling pressure on those counters. And in terms of the primary market names, do watch out for Caliber Mining and Logistics, where the IPO is set to open on the exchanges for subscription. In terms of other events to track, India is going to be launching its very first hydrogen train on the day, so it's quite an important moment for our country as well. So do watch out for all of these counters which could turn out to shape markets on the 17th of July.
Right, thank you so much for that, Meryl. Just very quickly, SmartWorks, 38% of the shareholding lock-in is expiring. The stock is trading up around 15% from the IPO price, so could well be something that you could see in terms of pressure and selling. The other one is Bharat Coking Coal. The IPO price was 23, currently trading at around 36 rupees a piece. Again, something which you want to keep on your radar for Friday's day of trade. Yeah.
Okay, with that, I'm afraid we're completely timed out on this edition of Market Edge. From Harshmi and the team that put this show together, thank you so much for watching.